$194 billion.
It is a number that commands attention, isn't it? Even in an industry that's, used to big figures.
It's more than just attention. I was trying to contextualize that this morning. That backlog is roughly the GDP of, say, New Zealand, just sitting there waiting to be built.
It is. And specifically, that is the record-breaking backlog that Lockheed Martin reported this morning, January 29, 2026.
Which sets the stage for exactly what we're doing today. We are looking at Lockheed's Q4 and full year 2025 earnings. But, and I want to be really clear up front, if you're expecting a dry recitation of balance sheets, you were in the wrong place. We aren't doing that.
Right. The numbers are the headline, for sure. But the real story is underneath the math.
Exactly. This report feels less like a financial update and more like, I don't know, a blueprint for a new era of warfare. We're seeing this fundamental shift in how the government buys weapons, a huge pivot to autonomous systems.
Yeah.
And yeah, lasers are finally entering the chat.
It's what the industry is calling acquisition transformation. And I know that sounds like the most boring PowerPoint slide imaginable, but I promise you it's the economic engine that's going to make all the sci-fi stuff, the robot helicopters, the space interceptors, actually possible at scale.
So that's our mission for this deep dive. We're going to unpack this pivot. We need to understand how a legacy aerospace giant is reinventing itself for an AI-driven world. And we need to figure out if this new Department of War buying strategy is, sustainable.
And we should probably talk about the autonomous Black Hawk.
Oh, we are definitely going to talk about the autonomous Black Hawks. I have so many questions. But let's start with the foundation, the money. Give us the high-level view of 2025.
So the top-line numbers are strong. Sales hit $75 billion for 2025, which is a 6% increase. That's solid growth for a company this size. Looking forward to 2026, they're guiding for somewhere between $77.5 and $80 billion. The trajectory is up.
Growth is good. But reading through the analyst notes, the thing that seemed to really wake everyone up wasn't just sales, it was the free cash flow. Came in at $6.9 billion.
That was a significant beat. Wall Street was not expecting that much liquidity.
For anyone listening who doesn't day trade defense stocks, why does free cash flow matter more here than, say, just plain old profit?
Well, think of profit as an accounting number. It involves a lot of, estimates and depreciation. Free cash flow is the actual cash in the bank after you've paid for your factories and your operations. It's the fuel. It's what you can use for dividends, buybacks, or, crucially for this story, reinvesting in new tech.
And what caught my eye is they generated that much after pre-funding their pension.
That's the kicker, yeah. They paid off their 2026 pension obligations early, cleared the decks, essentially, and still had nearly $7 billion left over. That signals massive financial health.
Okay, so they're slush with cash. But the real narrative shift, and what I want to dig into, is how they're getting these contracts, this acquisition transformation.
This is, I would argue, the most important takeaway from the call. Historically, defense spending is this volatile annual dance. Every year, Congress fights over the budget, the Department of War gets an allowance, and contractors get a one-year deal.
Which sounds like a nightmare for planning. You don't build a new factory if you think your funding might get cut in 12 months.
Precisely. It incentivizes inefficiency. You build slow, you keep inventory low. But that's changing. We're seeing this shift to multi-year framework agreements. And the headline example they dropped is for the PAC-3 MSE missile and the FAG-E interceptor. They just signed a 7-year agreement.
7 years. That feels unprecedented for munitions. Usually that's for like an aircraft carrier that takes a decade to build.
It's a game changer. It fundamentally changes the manufacturing economics. When you have a 7-year commitment, you can invest your own capital with certainty. You can go to your suppliers and buy microchips in bulk for the next 5 years. You can hire a workforce knowing you won't have to lay them off next December.
It creates a stable demand signal. And Lockheed's responding to it. They mentioned ramping up PAC-3 MSE production.
Drastically. They are taking production from about 600 missiles a year to 2,000 per year. A 3x increase. Just can't do a ramp-up like that on a year-to-year handshake.
Now, I want to challenge this a bit. Because from the taxpayer's side, what if the tech changes? What if we don't need 2,000 missiles in year 5?
That's the risk. But the government has built in what's called a make-whole provision to encourage this investment.
Which sounds a bit like heads we win, tails you lose for Lockheed.
I can see why it looks that way, but think of it as risk sharing. Essentially, if the government cancels the order halfway through, there are legal mechanisms to make sure Lockheed recovers the money they spent building those new factories.
Yeah.
It de-risks it for them so they actually build the capacity we need now.
So it's like renovating a house for a landlord, but having a contract that says if they kick you out early, they pay for the new kitchen you put in.
That's a fair analogy, and it's not hypothetical. Because of this contract, they're breaking ground on the Munitions Acceleration Center in Camden, Arkansas.
Right. Camden's becoming the center of the missile universe.
It seems so. This new facility is purpose-built for this surge capacity. It's the physical manifestation of this new business model.
Okay, so we have the economic machinery.
Yep.
Cash, long-term contracts, new factories. Now let's talk about what they're building, because this Arsenal of the Future section reads like science fiction.
It reflects a broader shift. The Department of War is moving towards systems that are autonomous, connected, and cheaper to shoot. They need mass.
Let's start with autonomy. The U-Hawk, the Atana's Black Hawk. This feels like a massive leap.
It is. This has moved from experimental to operational very fast. Back in November, the Secretary of War, Pete Hegseth, actually flew one.
But not inside it, right? He wasn't grabbing the stick.
No. He was at DARPA headquarters. He flew a full-size Black Hawk helicopter remotely using a tablet.
That image is just striking. The Secretary of War, with an iPad, effectively swiping left to land a military helicopter.
Well, the interface is simple because the AI handles all the complexity, the flight mechanics, stabilization. The computer does that. The human just indicates intent. The implications are huge.
Right, for contested logistics.
Exactly. If you need to fly blood bags to a base that's taking fire, you don't want to risk a pilot. You send the U-Hawk. Or think about fighting wildfires at night or in heavy smoke. The U-Hawk can keep flying 200/7.
It saves your human pilots for the really complex missions.
Correct. And speaking of outsourcing danger, we have to talk about Project Carrera, the drone wingman.
The loyal wingman concept.
Yes, Skunkworks just hit a major milestone. They had an F-22 Raptor, a 5th-gen fighter, actually control a drone wingman from the cockpit in flight.
Walk me through that. Is the pilot flying the jet and also joysticks flying a drone? That sounds like cognitive overload.
No, that's the key. The pilot isn't flying the drone. The pilot is the quarterback. They issue a command like, scan that sector or jam that radar, and the drone's AI figures out how to do it.
It's a force multiplier. One human, but a whole formation.
And economically, it's crucial. You can't afford to lose an F-22, but you can afford to lose a drone wingman. It completely changes the calculus of attrition.
And then we have the lasers. Helios, we've been hearing about this stuff forever. Is it finally real?
It's real and it's operational. They detailed a Navy demo where the Helios shipboard laser successfully engaged and destroyed a drone.
And again, looking at this through our deep dive lens, this is really an economic argument, isn't it?
Entirely. It's about the cost exchange ratio. Right now, if an enemy sends a, say, $2,000 drone at a Navy destroyer and we shoot it down with a standard missile.
That missile costs, what, $2 million?
Sometimes more. So you spend $2 million to kill a $2,000 threat. You can win every single engagement and still go bankrupt losing the war.
That is a terrifying math equation.
It is. The laser solves that. A laser shot costs basically the price of the diesel fuel to run the generator. Pennies. Maybe dollars per shot. It lets you save the expensive missiles for the big threats.
Okay, before we leave tech, I have to ask about the X-59, the quiet supersonic plane.
Ah, yes. It finished its first flight in October 2025. This is a partnership with NASA.
And the goal is to fix the sonic boom.
To turn the boom into more of a thump. Right now, supersonic flight is banned over land because of the noise. If the X-59 design works, it could lift that ban.
New York to LA in 2 hours.
That's the idea. It opens up a massive commercial market.
Okay, let's pivot back to the business units. How's the rest of the portfolio performing? Let's start with aeronautics.
Well, aeronautics is still the heavyweight champion. The F-35 program is just a juggernaut.
They set a delivery record, right?
191 F-35s in 2025. That production rate is about 5 times faster than any other Allied fighter program, and demand is global. Belgium and Finland just got their first jets.
But there was a detail that surprised me. Lockheed is spending $1 billion of their own money on F-35 sustainment.
It surprised a lot of analysts, too.
Why do that? Why not wait for a government contract for spare parts?
It's a strategic move. The F-35 has faced some criticism over its mission-capable rates, how often the jets are actually ready to fly. If parts aren't available, the jet just sits there.
So Lockheed is seeing that friction and deciding to grease the wheels themselves.
They're trying to prove they can be partners, not just vendors. By investing that $1 billion now to fix the supply chain, they're betting the increased uptime will lead to even bigger performance-based contracts down the road.
It's a confident bet. We'll fix it, then you pay us.
Exactly.
There was also a cryptic note about a classified program in aeronautics.
Ah, yes. The classified program.
I always want to know what that is. Next-gen air dominance fighter, a new drone.
We just don't know. But financially, the news is that it has stabilized. They were taking losses on it in 2024, which usually means development problems. But in Q4 2025, no new charges. Management said they're watching it like a hawk.
Let's hope it's a U-Hawk.
Let's hope. But it suggests whatever integration issues they were having are getting solved.
Okay, moving to space, the high frontier.
Space is rapidly becoming a warfighting domain. The standout program there is NGI, the Next Generation Interceptor.
The missile defense shield.
The evolution of it. The challenge is immense. You're trying to hit an enemy ICBM in space, from space, moving at thousands of miles an hour. It's hitting a bullet with another bullet.
And they also picked up a big satellite contract.
A $1 billion award,
Yeah.
yeah. For the Space Development Agency's Tranche 3 tracking layer, they're building 18 satellites. This is part of a new philosophy, instead of a few giant, juicy targets.
Battlestar Galactica style.
Right. They're moving to a proliferated architecture. Hundreds of smaller, cheaper satellites. If the enemy shoots down 5, you still have 95 left. It's resilience through numbers.
And I have to mention the robot boats, the partnership with Saildrone.
This is a fascinating example of cross-pollination. Saildrone makes these autonomous sea drones that can stay out for months. Lockheed is taking their JGGM missile, usually fired from helicopters, and putting it on the boat.
So you have a robot boat just floating out in the Pacific armed with missiles.
It creates a distributed, lethal web at sea without risking a single sailor. It turns the ocean into a minefield for the enemy. And again, it's cheap.
Okay, we've covered the tech, the sectors, the strategy. Let's look at the crystal ball, 2026.
The guidance is very strong. They expect earnings per share to jump significantly. We're looking at a range of $29.35 to $30.25.
That is a massive jump from the $21.49 they just posted. What's driving that?
A few things. No one-time charges, like that pension settlement, and higher volumes. But what's really interesting is the step function increase in their own investment.
Define step function for me.
It means a sudden stair-step jump up. Their capital expenditures and R&D spending are approaching $5 billion. That is a massive reinvestment.
And this is where I want to push back again. Usually, Wall Street hates that. They want buybacks and dividends. Why are investors letting Lockheed spend $5 billion on factories?
Because Lockheed has successfully sold them the acquisition transformation story. They're arguing that because they have these 7-year contracts, investing in factories yields a better return on investment than just buying back stock.
They're playing the long game.
They are. They're betting the Department of War will reward companies that invest in their own capacity. It's a shift from just extracting value to building value.
So, pulling this all together,
Yeah.
we've gone from the $194 billion backlog to laser-armed ships. If you had to summarize the main narrative here, what is it?
The narrative is that Lockheed is capitalizing on a dangerous world by locking in long-term stability. They're trading the chaos of annual budgets for the security of multi-year contracts and using that security to invest heavily in autonomy and capacity.
So it's a shift from a contractor model to something more like a commercial business model.
Exactly. They're operating more like a tech giant with a long-term roadmap.
Which brings us to the so what? Why does this matter if you don't own Lockheed stock?
It matters because it signals how the U.S. intends to maintain its edge. It's not just about spending more money. It's about spending it differently. It's about speed, capacity, technology. If this works for Lockheed, you will see it ripple across the entire industrial base. It sets a new precedent.
It's a new operating system for the military-industrial complex.
That's a great way to put it.
So here's the question we want to leave you with today. We talked about these 7-year commitments, these commercial-style agreements. If the Department of War is truly moving this way, does this signal the end of the traditional boom and bust cycle of defense spending? Or is this just a temporary fix for a volatile world that will vanish as soon as the geopolitical temperature cools?
That is the multi-billion-dollar question.
Yeah.
Can you smooth out the chaos of war economics with a contract?
Something to think about. Thanks for listening to this deep dive. We'll catch you on the next one.
Goodbye, everyone.